When you check out your phone, especially on social media platforms, you might be seeing ads like this, where stocks can be bought for just 10 rupees and they'll be multi-baggers very soon. They always follow a very similar pattern. 10 rupee stocks moving up to 1000 rupees or higher. So that makes everyone think, what if I just invest 10,000 rupees? Will that make me a millionaire overnight? Today we'll discuss what are penny stocks, what are the biggest risks around it, what are some myths about penny stock, should you be investing, and how to find those multi-bagger stocks as well. So yes, without further ado, welcome to Market Feed. This is Ajay Ajith. Let's get started. So we'll start with what are penny stocks. So there is no real definition of what a penny stock is, but we can classify it as a stock with a very low stock price and a very small market cap. Okay, that is clear. So we'll take an example here. A stock with a price of less than 20 rupees and less than 100 crore market cap is generally known to be a penny stock. So in the beginning of the video itself, you should be getting the idea. Is a stock like Vodafone Idea or V a penny stock or not? Do you think that Yes Bank is a penny stock or not? Do pause the video and comment down below what you think. Both of these stocks, even though they have a very small stock price, they cannot be called as penny stocks because of their high market cap. In fact, Vodafone Idea is a company that is worth nearly 1 lakh crore rupees. It can definitely not be called as a penny stock. So hope you understood the concept. A stock with a very small share price as well as a very small market cap. Only those are the ones which are called as penny stocks. So then let's look at why are people buying these stocks. The sad fact is that they feel that it is a very small investment and end up buying these stocks after seeing ads on Instagram or maybe in some Telegram groups. So less capital, they believe they're getting a good stock at a cheap price and they're seeing all of these really big companies and hoping that one day this share price will also increase up to, let's say, a Titans level, a Reliance level, or some big large cap companies level. So now you understand why most people are buying these penny stocks. It is not because they did any in-depth fundamental analysis or tried to find 1 in a million gem. It is only because they found out these ads on social media or think that a share price which is now increasing will keep on increasing forever. So let's look at some common myths that support their story or support their investment psychology when they're investing into such small companies. So the first myth that I hear a lot of people talking about is that today's large cap stocks were always or once a penny stock. Do you think this is right? I definitely do not agree, because if you're looking at most of the listed companies in India right now, most either list with a market cap of at least 5,000 crores, 10,000 crores, or even much more than that. You might have seen the examples of LIC and many other companies which went public over the last 2 years. All of them already got listed only after the company found some initial success in the market and thought of sharing this success with retail investors. The second myth is that people believe that a 1 rupee stock might turn into a 2 rupee stock easily because only a change of 1 rupee is needed there. But they do not believe that a 1000 rupee stock would move into a 2000 rupee stock. So if you're thinking very practically, both the company's share prices actually move up by 100%. But for some reason, people believe that it is much more easier for that 1 rupee stock to turn into a 2 rupee stock. Do you think that is a logical way of thinking? If not, let's continue. Third reason, technical analysis works well in penny stocks. I've seen a lot of people discuss this, especially in stocks worth 100 crore market cap or lower. They believe that they have found an amazing level. They believe that they're finding breakouts and they are ready to invest their money into it. But the reality is that most of these stocks can be easily manipulated. The lower the market cap of the company, the lower shares that are being traded on the open market. So anyone with a decent size of capital can easily start manipulating the stock, and that is where technical analysis actually tends to fail. I've also heard people saying that Titan was also a very small company with a very small market cap, and today look at it. It's a large cap company with lakhs of crores of market cap. So hasn't it actually expanded? But one thing that people fail to realize is that even at that time, Titan's market cap was in the hundreds of crores, and if you account for inflation today, that is still considered to be a decent sized company. I wouldn't call it a large large cap company, even a mid cap company, but it was a decent sized company with actual revenue and returns. So what did we understand? Often these stocks have very low liquidity. They have very less chance of blowing up into a large cap company. It is more so like a lottery ticket that you might be taking, where you're investing a small amount of money and it can go up to a large amount. But it is never an assured or guaranteed gem in the market that you're usually finding in all of these social media ads. So is there no way where you can actually find a penny stock which can be a gem, a one in a million that can go from 10 rupees to 1000 rupees? Let us find out. First, we'll look at all the penny stocks in India by looking at a simple screener here. So let's go into screener.in and try to find out which all are the penny stocks which are available in India right now. So first, we'll go ahead, select a market capitalization less than 100. It automatically converts to crores. And then we'll also go ahead and give current price less than 20. So what does this show? All the companies in India listed today with a market cap less than 100 crores and price less than 20. Let's run this query. So you can see that 777 results have been found where at least all of these companies can actually be called as penny stocks with very small market cap and very low prices. But let's go ahead and try to screen this even further, because we know that if these companies are actually doing good, if their fundamentals are really solid, then their sales and profit over the last multiple years would be really amazing. Right? So let's go ahead and give those two extra conditions. One is sales growth 3 years greater than 50%, and the next one is profit growth 3 years greater than at least 30%, right? So let's go ahead and run this query and we can see that 34 results are now showing up. So what can you understand? Out of the 777 stocks, which can technically be called as penny stocks, only these 34 companies at least are showing up in the screener where their sales and profits are increasing really well. But again, this is not an endorsement. These stocks are definitely most probably not even going to be gems. I'm just showing you the condition where when we added two small tweaks to the screener, most of the stocks fell apart. In fact, we'll go into few of these stocks as examples and show you still why you shouldn't be investing or why these are still bad investments for you. Let's go into few of these companies here and see how their chart patterns look. So the first company that showed up here is Promact Impex Limited. Now let's go into the 1 day chart here. You can see that it is a very shady chart, right? In fact, after seeing this, if you feel like you still have to invest in such companies, I feel really bad, right? So you can see that there is a clear case of possible manipulation happening. You can see that stock price in June 2023, it immediately flew up more than 230%. It crashed back nearly 30-40%, and you can see that after that it's still rallying and still falling after that, right? So it mostly looks, at least to me, like manipulation in few of these stocks. So does that mean that these companies you should be blindly thinking that they're all bad and they're not to be invested in? I would disagree, right? You should just follow the basics of fundamental analysis here. So there are certain technical or certain parameters that you can look into which could confirm to you that it could be a good company. What are those? As we all know, we here are students of fundamental analysis. If you have not watched our videos in depth on how to analyze a company using fundamentals, make sure you go check out the videos here in the I button. If you're investing into a penny stock, let it be any stock, even a large cap stock, there are just some parameters that you should be looking into. The first thing is business model. The next thing is vision. The next thing is management. Then the next thing would be financial ratios and the financial performances. Then the last thing that you should be looking into is promoter holding. In fact, there was a community member who contacted us a few months ago regarding a stock that he had purchased. The stock's name was Murray Organizers, and he got into the stock somewhere around that 8 rupees time frame, right? Let's look into how the price moved after that. So the price moved somewhere around 8 to 10 rupees he entered. The price moved up, it went to 20 rupees. And after that, you can see a clear case of pump and dump where the stock is now at a price of just 1.59 rupees, a capital erosion of nearly 90%. Let's look at or try to understand what happened in this company. So if you scroll down and check out the promoter holding, you can see that September 2021, the promoters were holding 70% of the company. The public was holding only 29.96. After that, eventually in March 2022, it came down to 50%. And in June 2022, 37%. After that, 0%. So what do you think happened here? It is called as a rug pull. right? Promoters exiting the company by inflating the share price. I think it is a classic case of what happened here. I'm not sure, but this certainly looks like the case. So after seeing all this, you still want to invest in a penny stock, then you should be definitely watching this part. So the first concept that you should be knowing about is bid and ask. So usually in any normal stock, when you're trying to purchase a stock by seeing 100 rupees on screen, you might be ending up placing a market order and you would be getting a buy price of somewhere nearly around 100 rupees. But in a penny stock, where the volumes are very low, there is a chance that the bid and ask prices are very different. That means you would see that the current price is 15, but then the asking price of sellers is 18 rupees, for example. So what would happen when you go ahead, place a market buy order? You would end up buying the stock at 18 rupees instead of the 15 rupees that you saw on the screen. And on the opposite side, when you go to sell the stock, you would see it having a price of 18 rupees, but then when you go to actually sell it, place a market order, it would get executed at 15 rupees. So that is all in all a 3 plus 3, 6 rupees capital washout, right? So keep that in mind. And why does this happen? That's the second reason, which is volume or liquidity concerns. So very often these stocks are always manipulated in the market. That means there are certain operators or maybe promoters themselves who are holding up all the shares and creating an artificial value. They might also be giving news articles saying that this stock is doing well, this penny stock has turned into a multi-bagger, and create a lot of retail interest. So with no real liquidity, these promoters or these operators of the stock, they will be pumping up the stock very easily with the help of retailers. Yes, they would have already bought in before the stock rally and they would eventually find a peak and start selling there, just like the example that we saw earlier in Murray. So that is why often you see the stocks getting locked in an upper circuit, or if they're falling, you may not even be able to exit because they're falling every day in a lower circuit, right? There will be absolutely no buyers in the market when you're actually trying to sell. Okay, you're still not convinced? Then it's a good thing that if you have found that one stock with really good conviction, there are two last things that you should be knowing about which are really critical before investing into a penny stock. So the first one is chance of manipulation. So just like I said about chance of manipulation in stock price, there could also be chance of manipulation in the books of a company. The smaller the company, the regulator compliances for that company will be much lower. So easily they can start internal party transactions or related party transactions and they can show huge profits or returns in their books. And what do you think will be happening? After cooking the books, as it is called, these promoters will be easily exiting at the very top and they can easily trap all the retailers in the scheme. So be afraid of this real thing that happens in the market, which is called as cooking of books or fundamental analysis even failing for these companies. And the next thing, if you have found that real conviction, is that you should understand it is not a short-term game. In fact, most penny stocks you cannot even trade intraday, right? There are certain restrictions put on by the exchanges for that. So you'll be having or seeing an investment horizon of 3 years or higher, right? It is definitely not a quick rich scheme and you should not be going in with that mentality. So if both of these are covered, then we'll go into the next step, which is how much risk you should be actually taking and how you can think about investing into your gem of a company. So what I truly want to believe is that there are some opportunities in the market which can give you high returns with very high risk, right? So the only thing that you can do to control your risk is position sizing, right? Or capital management. In fact, if you found that one gem of a company and if you expect it to give 100x returns, what is limiting you from putting just a small amount of capital? Only your greed. So I would say do not invest more than 1% of your investment capital into such penny stocks if you find that one gem, right? So let's say you found a few stocks, at least 5 stocks, which you consider have an opportunity to give you 10x, 100x or even higher returns over the next multiple years. So spread out across all of these stocks, your total exposure of your portfolio should be less than 1%. So do you understand what will happen here? In the case that your view goes wrong, in fact, that is what could really possibly happen, right? You investing into a 15 rupees company and it likely going to zero is more probable than that 15 rupees company going to 300 or 500, right? So let's say that even if you lose your entire capital, you lose just 1% of your portfolio. So if you had 1 lakh rupees worth of portfolio, you lose only 1000 rupees. And what is the upside? If you're investing into those companies and you're seeing 100x returns, even that one stock can give you 100% on your entire portfolio. That 1% will go to 100%, right? That is a benefit you would be getting. So keep this in mind if you have found that hidden gem and really want to invest. So needless to say, throughout the video, we have seen certain examples where the stock prices of these companies have shot up, they've crashed down, but there are definitely some multi-bagger companies out there which can, at least they might not be called a penny stock, but their market caps might be slightly different, but they have the potential to increase much more. So all of these rules you should be following, you should be keeping a watch of the company, and you should be ready to stay invested over multiple years. And I would say, do not invest in any stock that people recommend, especially these scammy Telegram groups and Instagram ads that you see. I've even seen Instagram ads being run on prominent fund managers' names as well as YouTubers' names. These are again not real ads, guys. These are all fake ads just to promote that penny stock, where there will be pumping up the stock. The operators will buy few stocks, they'll pump up the price, and in the end, the retailers will be left holding the bag. So this is the only one thing you should be avoiding. And with that, let's wrap up the video. I hope you got the entire concept and why this is a very risky form of investing, which most people should stay away from. And even if you're planning to get into it, how you should be a fundamental analysis master, and you should also have some luck or that lottery factor in mind when you're investing into all of these stocks. So yes, this is Ajay Ajith signing off. See you all again in another video. Bye bye.